Is the Property and Casualty exam open book truth revealed? Welcome to the quiz. A delivery driver for a pizza restaurant uses his own personal vehicle to make deliveries. He is paid a small fee per delivery by the restaurant. While on a delivery, he runs a stop sign and causes an accident. His personal auto policy has liability limits of $25,000/$50,000. The injured party's medical bills are $40,000. How will the insurance coverage typically respond? Is it A, the personal auto policy will deny coverage because the vehicle was being used for business purposes, which is a common exclusion? Or B, the personal auto policy will provide primary coverage and the pizza restaurant's commercial auto policy would provide excess coverage? C, the personal auto policy will cover the full $40,000 because delivery driving is considered a pleasure and business use. Or D, the claim will be split between the driver's liability and the restaurant's general liability policy. The answer is A. Personal auto policies exclude business use of the vehicle. Regular delivery is business use. Coverage is denied. The second is wrong because personal policy excludes first. The third is wrong because delivery exceeds pleasure/business allowance. The fourth is wrong because general liability typically excludes auto. Next question. An accountant has a professional liability, errors and omissions, policy. A client sues the accountant for making a mathematical error on a tax return that resulted in the client paying a large penalty and interest. Under the professional liability policy, how will this claim be considered? Is it A, the claim will be denied because it involves a known loss if the accountant realized the error after filing? Or B, the claim will be covered as it arises from a negligent act, error, or omission in the performance of professional services? C, the claim will be handled under the accountant's general liability policy because it occurred in an office? Or D, the policy will pay the penalty and interest, but not the legal defense costs? The answer is B. E&O/professional liability covers negligent errors in professional services causing financial loss. The first is wrong unless known before policy inception. The third is wrong because GL excludes professional services. The fourth is wrong because defense is included. Next question. A restaurant has a CGL policy. A customer becomes ill after eating a meal and sues the restaurant, claiming the food was contaminated. The contamination occurred because a refrigerator malfunctioned overnight, not due to anything the restaurant did during the preparation process. How will this claim be evaluated under the CGL? Is it A, the claim will be covered under product's liability as it arises out of the consumption of the restaurant's product? Or B, the claim will be denied because the customer did not suffer bodily injury from the incident? C, the claim will be covered under premises liability because the food was consumed on the premises? Or D, the claim will likely be excluded under a specific contamination or foodborne illness exclusion? The answer is A. Food contamination from restaurant product is covered under product's completed operations, part of coverage A. Foodborne illness is typically covered unless specifically excluded. Most standard CGL do cover. The second is wrong because illness is bodily injury. The third is wrong because consumption is product exposure. The fourth is wrong because standard CGL has no blanket food exclusion. Next question. A professional photographer operates out of a small studio downtown. She carries a commercial property policy that covers the building and its contents. One evening, a broken pipe causes water damage to expensive camera equipment stored in cases directly on the floor. Under the standard causes of loss broad form, how will this loss typically be handled? Is it A, the loss is fully covered as water damage from plumbing is a covered peril under the broad form? Or B, the loss is excluded because water damage is never covered under commercial property policies? C, the loss will be covered only if the photographer can prove the pipe broke due to a sudden event, not gradual deterioration? Or D, The loss is covered for the building structure, but the camera equipment is excluded as it is considered money and securities. The answer is C. Broad form covers sudden and accidental discharge of water from plumbing systems, but excludes damage from continuous or repeated seepage. Sudden pipe break qualifies, while gradual leaks do not. The first option is wrong because gradual water damage is excluded. The second is wrong because sudden plumbing water is covered. The fourth is wrong because camera equipment is business personal property, not money and securities. Next question. A manufacturing plant has a workers' compensation policy. An employee who works on the assembly line develops carpal tunnel syndrome after several years of performing the same repetitive motion. She files a workers' compensation claim. How will this claim be evaluated? Is it A, the claim will be denied because it is not the result of a specific, sudden accident? Or B, the claim will likely be covered as an occupational disease arising out of and in the course of employment? C, the claim will be covered only if the employee can prove the company knew the conditions were unsafe? Or D, the claim will be handled under the company's general liability policy, not workers' compensation? The answer is B. Workers' compensation covers occupational diseases from repetitive exposure in employment, not just sudden accidents. The first is wrong because gradual injuries are included. The third is wrong because no negligence proof is required. The fourth is wrong because workers' comp is exclusive remedy. Next question. An HO3 policy includes coverage C, personal property, with a limit of $150,000. The insured's home is destroyed by a covered peril. While sorting through the debris, the insured realizes that a $10,000 coin collection, which was kept in a safe, is missing and presumed destroyed. How will the insurer typically settle the loss for the coin collection? Is it A, the insurer will pay the full $10,000 as it is part of the personal property limit? Or B, the insurer will pay nothing for the coins, as money and coins are specifically limited or excluded under the standard HO3 policy? C, the insurer will pay up to a special sublimit for coins, often $200, unless they were specifically scheduled. Or D, the insurer will pay for the coins only if they can be proven to have been purchased within the last year. The answer is C. HO3 has special limits for money, coins, and precious metals, typically $200 or $250 total for all such items. The first is wrong because full limit does not apply. The second is wrong because limited coverage exists. The fourth is wrong because time of purchase is irrelevant. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.